to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. As we said just a moment ago, Meg's here, so we are ready to do this thing. Actually, looks like we're actually trying to start on time here today, which is a huge accomplishment for us, I suppose. Today is, where are we? Today is Wednesday, 24th of July. So one more week. Merry month of July will be behind us here soon. So, well, I guess get your plans ready for the latter part of the summer here. I suppose we're going to be officially heading into the dog days of summer. And for the record, the European Union officially announced this is the hottest day the planet Earth has ever seen. What? I mean, it's remarkable how the politically charged message is just one directional day after day after day. Just keep hammering the same message. Drive you crazy. Anyway. I suppose, summer is supposed to be hot. I think that's what's supposed to happen in summer. Interesting to see breadth indications. As our itinerary says, let's try and stay on path, and maybe we'll even get this thing done in 15-20 minutes. That'd be kind of fun, eh? But interesting to see. I have been worried and sort of concerned. And if anything, I do like the message that the breadth indicator has been giving us, that there's something stinks about this rally, and it ain't the cheese, as they say. And indeed, U.S. stocks, they got hit hard here overnight. Not really like crash scenario, more like, this market went up way too far, way too fast. And now we got a backfill. In fact, I remember chatting with the day traders here this morning. I had been sort of sitting there very kind of scratching my head because when the June futures contracts went out and we rolled to the September contract for the futures, they left like the biggest gap in the world on these darn charts. It was like, what the heck is going on? Actually, this is not what I want to be showing you. Where do I want to show you? I guess back over here, maybe. Here's our stock market charts. So this was the expiry of the June 2024 ES futures contract. And then the next day, they jumped to the September contract. And this is where our breadth indicator went all screwy and sort of was like, well, something's not right with this picture. And sure enough, turns out the whole thing was just fluff. I don't know whether I have these concepts drawn correctly or not, but we are breaking. I guess you could argue we broke some previous bullish structure here. And if there was some sort of counter trend rally back up into this range, we could have thought of ICT's fair value gap kind of idea, but I don't know whether this is valid or not. What I will say though is we are breaking through these structural levels. It'd be interesting to see where we close on the day. You can also see A, B, C, D. I get the impression they really want to fill this gap in. Bring the market back to this is a high to high trend line. So doink doink. Interesting how that is that gapping level. And my hunch is probably key support in this area. And we were even talking this morning about, wow, there should be quite a fight against all these lows and against this uptrend channel line. This channel, I think, was it? Yeah, it was drawn off of these lows, this market structure, and then projected off of this high. That gave us this channel. So I guess just the point starting out of the gate is our breadth indicator has been basically not happy at all. Unfortunately, when it does give signals, though, I know a lot of people are kind of like, well, I want to trade just when the breadth breaks down to go short. And I don't know whether that's really the best way to use this tool. I think it's, just like indicator analysis, your three reasons to justify taking a trade. If you do happen to see the breadth indicator above the overbought zones, like or below the oversold zones, all right, that definitely gets my attention. But when we're sort of swimming around here in no man's land, there was, and actually this is the Dow Industrials. Here's the S&Ps over here. Here was the signal back in, the end of June when that June option or that June futures contract expired. They jumped to the September, and I would actually make the argument the breadth actually was negative the whole rally there that I showed you up top, and now they're finally cleaning this thing up. The problem here, though, is this might take a while to actually reverse back to the upside. We've been talking about this, the industrials, its breadth looks negative, transports, and actually had great conversation with the level threeers yesterday about intermarket analysis relationships, and that they're all sector rotation gurus. They're all fans of Sam Stovall. Good job, Rebecca. Nice Q1 report. I saw you post. I don't know, it was Q1 or Q2. We're posting in the level 3 classroom this morning, or I guess probably last night for us, this morning for you over in Europe. But the point here is, do I see any of these breadth indicators actually pointing bullishly right now? No, not a single one. That's not a good sign, folks. And just out of curiosity, let's see how's our crypto looking. Oh, goodness. Oh, Jesus. So let's I think the easiest way to describe this is the broader market is not helping the bull at all right now. Not one bit. Ay, caramba. So just be forewarned, right? It's could be a bit of a challenging period here going forward. And if anything, while the market is sanguine like this, I'm not really too excited about putting on new long positions. If anything, I almost want to wait for the market to settle down, at least start showing us some W's or something here. And then maybe we can start thinking about strapping on new longs. So I'm a little bit leery. In fact, actually, our daily email report, kind of shocking. I don't know whether we have the indicators working correctly on the bearish setups here just yet, but BTC USD is spitting out bearish fractals in 1 year reload zones. And I also noticed came up on the 90-day screener as well, if I'm not mistaken. I thought I saw it in here. Where is it? 90-day RLZ with RM and RSI and a bearish fractal. And we also had the 1 year. So Bitcoin's not helping. And really, I hate to say it, but I think it's just a function of the broader market. What is interesting is they always say you can't write better fiction than reality. I don't think anybody could have scripted what's going on here with good old Sleepy Joe. Poor guy. I mean, I suppose, he's in his twilight years. He's got lots of pensions. And of course, he's made plenty of deals with various actors around the world. I'm sure he's not worried about money and riding out his elder years in retirement. But I think he's probably going to turn into like a Jimmy Carter, where through the entire 1980s, I remember Jimmy Carter was kind of like a laughing stock, which was such a shame. Because I think on balance, I think Mr. Carter had good intentions, but the whole situation with Iran for him went so badly. And of course, the whole inflation problem. What a surprise. Now we're mired, of course. Well, I mean, I suppose we could go to war with Iran any day now. And I wouldn't be surprised if Mr. Trump ratchets the temperature up there. And of course, we've got problems with inflation. So they always say more things change, the more they stay exactly the same. Anyway, so the bottom line here is breadth of the market is not happy here at all. And it's going to take some work here to fix this. Technically, they've done some serious damage. to the market. Like even our weekly commodity trend survey, I remember just a few weeks ago, we were barking about how like almost more tn half, like something like 2/3 of the crypto top 30 was in that sort of either hunting longs or even potential buy signals. Now you can see most of this universe is either neutral or actually hunting sells because the damn market's moved up too much. So it just goes to show how quickly things change. And yesterday's message to the community was, for God's sakes, don't go and chase this market and just blow all your patience and discipline for hunting W's because you missed that last W window, because you might just get bitch slapped here if you go and strap on an asset that's already jumped up 50% here, thinking that there's no risk. Boom. What are some of the drivers here today? What the hell's going on? Ironically enough, it's not really econs. I don't think econs is the word today. I mean, it's interesting to see the Bank of China decided to lower interest rates again. So the irony of it all is that you don't really like to see the central bankers lowering interest rates, and especially on a tick by tick by tick basis, because this might just be a long, slow dribble. You can see the econs coming out of Canada here this morning. We had things like new home sales ticking down, and like for whatever it's worth, I think the bubble in the real estate industry in Canada has burst. That was actually a function of the fear cycle. The fear cycle actually ended in 2018. So we're 6 years overdue, right? This bubble literally kept inflating itself for another 6 years. And really, you all know the message about China, and then to add insult to injury, not only the fact that we're on a bearish cycle for this country, we've got this idiot leader of ours who he can't do anything right these days. So anyway, we'll leave China at that. US econs, and most people around the world, they don't even pay attention to China. And frankly speaking, I would actually agree with that. But US data coming out here today, interesting to see, like sort of the composite PMI actually ticking up. Again, awfully tough to justify cutting interest rates in the face of that. We had manufacturing sector, which of course has been on the outs down in the States. And I do think that manufacturing still, instead of coming back to the States, is probably going to relocate to things like Mexico. The global services, which I think is a function of the baby boomers in their retirement, it's booming here again, beating expectations, and I think that's what actually caused the entire composite to tick higher. So that data set's not really that bad. New home sales, of course, Jerry's been talking all along here that housing inflation has been one of the main problems for this whole inflation thing. So if anything, this is probably good news for people who watch the Fed. But at the same time, too, it's not an accident that the Chinese market is going to roll over at the same time as the U.S. housing market. I would actually argue that housing usually moves in these 40-year cycles, basically fear and greed cycles back and forth. The Americans, of course, went through their housing bubble, through their respective greed cycle following it. Like Chinese have gone through their housing bubble through their respective fear cycle, which is Canada, US exact opposites. So really, it's just business as usual. I wouldn't really expect to look to the housing industry to make a fortune going forward. I think we do have a problem with inflation near the end of the decade, but I think that has more to do with things like wages finally catching up to the point where people can actually afford to live. And I wouldn't be surprised if that's the debate over the next 5-10 years, is what's a living wage and how do we get those wages higher for the working class so that they can afford this great reset that's been thrust upon us. So I really wouldn't look for the housing industry as a big savior here. If anything, greed cycles what we should be looking for are growth assets. And I do notice it's actually this is an interesting development. With the resurgence of Mr. Trump here, I think that there actually is a rotation going on in the market, and I have seen a lot of people talking about this. Where if we look at things like the Nasdaq, which I do think that to a certain degree, the Nasdaq is very much influenced by these big honking mega companies. And they, like four or five of them can drive that index around, you can see, and they're having a pretty nasty day here today. So as a result, Nasdaq's getting thumped. We are actually into earnings season right now. And interestingly enough, it's not so much that the earnings are bad or terrible. It's just more that they're just not knocking the cover off the ball, and these stocks have been bid up to absolutely ridiculous levels, sort of nosebleed valuations. Everything absolutely has to be absolutely perfect. That even a company like Google can come out and actually beat on the EPS number, beat on the revenue number, and yet still the stock is getting hammered here, down 5% on the day. What the hell's going on here? And I think it's just really these silly stocks they're like priced to perfection. I mean, look at the crazy ass bull market. That's ridiculous. And of course, Chris is telling me we're 15 minutes in. All right, thank you, sir. You can see these holes on the charts. I mean, at some point, all of these gaps should be filled in. So I think we'll probably go through the process of filling all these in. But I think what's more going on here is there's a rotation in the market where I do believe that these big honking technology companies, I think to a certain degree, they actually own the Democrat Party. And as long as the Democrats are in power, it's just business as usual. Tech stock's going to rule the world kind of idea. And with Mr. Trump actually re-exerting himself, I think the best analogy for Trump is drill, baby, drill. So as an interesting sort of situation here, we actually see that the brick and mortar companies are actually doing okay. Look at the Russell 2000 is only down 1/8%. And frankly speaking, that thing looks like it's about to go positive here on the day. And look at the Dow. The Dow's actually trying to put in a double bottom here. You're going to find crazy things like oil stocks are actually going to do okay. Pharmaceutical stocks, like just utilities, you can see where the green is over here. There's energy. And the only real problem in the market is these stupid tech stocks. And look at the size of these companies. This has gotten just absolutely ridiculous. And the worst part about this is once all this technical sort of overboughtness is cleaned up and breadth indicators and stuff start to firm up, I would not be surprised to see these things ramp right back up to new highs. But I think, if anything, I think the theme here right now in my eyes is it's a rotation where the market is now, I think, convinced that Mr. Trump's probably going to win this election. And usually the market has a pretty good idea. Historically, I found, I've been playing this silly game for 30, 40 years. I've found that usually by the time we get to the Democrat National Convention, the market has a pretty good idea who's going to win this coming election. Now, when is the Democrat National Convention? Chris says, just confirming you changed your noise cancellation. Sounds like potential issues if you change octaves. I can't remember whether I actually did change. And we're coming up to the end of this video, so I'll just leave it as it is. In the after party, I'll go and mess with the settings and stuff. So just don't talk like this, Brian, or else it'll go muted. You probably didn't hear any of that, did you? Anyway, so interesting tale of two markets. And we do see this quite a bit where you have like brick and mortar do okay and tech stocks get absolutely smoked. And then conversely, brick and mortar will be on the outs and tech stocks will be roaring higher. And I think that really is the theme of the day. as I said, we are into earnings season. The earnings are coming out in droves. I think that's really driving price action here today. And I just get the impression that these stocks have been basically priced to perfection. You can see that something like Allen and his car company, he actually missed on the EPS by about 16%, but revenue did come in a little higher. That to me says that he's spending more money on things like robots and stuff like that, and autonomous driving, probably having to buy politicians. Actually, kind of an interesting side, and it just goes to show it's a perfect analogy of who Alan is as a person. Um, about, I don't know, a week or two ago, I guess, all the headlines were that, Alan says that he's going to go and give Donald Trump $45 million a month to make sure that he's elected. Oh, buys lots of press. Everybody's impressed. Oh, Alan's on the front page of everything. Then today, oh no, actually, I'm not going to do it. I lied. I mean, that guy, oh boy, I would not trust him with my last dollar. He will lie right to your face and not have a problem about it one bit. And I don't know. I mean, let's leave it at that. So yes, it's earnings. Ironically enough, some of the earnings aren't that bad. Some of the companies, though, if you don't hit these numbers, they're getting absolutely punished here today. I think we saw Visa was another one. They missed just slightly on the revenue, but I think he was getting punished as well today. So that's, I think, the tone for this market. Finish off this free broadcast with, of course, just a quick boo at things like, and I think I mentioned it, the Bank of China cut rates. So yeah, we did talk about that. We did have an EIA report come out today, and crude oil trading. Oh my goodness, it was all over the map today. Actually, I took two trades in my little account, and both of them were stopped at scratch today. So big hurry up and scratch day for the Beamish. And actually, one trade I get within like 4 ticks, I get my take profit level, and then the market just violently reversed the other direction and stopped me out at scratch. But I mean, this is basically the hallmark of today. Just stop run after stop run after stop run. It's just brutal. And the end result of this is it's going to be a higher market on the day. But man, that was tough session here for crude. So nothing really to get to report too exciting there in the crude oil trading business here today. As I said, when I was interacting with the day traders, to me, when I was talking to them, I was just like, well, stock market's on one directional. What is interesting, though, is noticing how the US dollar is actually coming off smartly on the poor earnings reports. So it does goes to show, I think, that a lot of people are actually buying US stock, and the moves ups and downs you see in the US dollar index is actually more a function of people buying US dollars to buy stocks versus buying US dollars to bury their head in the sand and buy US treasuries. Um, so kind of a bearish image now on EOL dollar with especially this MACD indicator flashing a bearish, confirmed bearish momentum divergence. Willie got a little stupidly overbought there. So now we got to clean this technical picture up along with the stock market picture. I really don't expect a hell of a lot out of the dollar here in the near term. With the reduction in interest rates in Canada, the spread between Canadian dollars and US dollars is getting wider. And I tell you, one of these days, if this trend keeps going, this Canadian dollar is going to get punched and punched hard. We did slip even this morning briefly through key support here. We've bounced following that, but if we start actually melting down through these lows, that's going to start setting up huge structural fail signals here. Well, we'll see how it goes. But you can see with the anticipation of the lower rates out of the China Ds and the basic sentiment that the housing bubble has burst, and really Canada doesn't have an economy. Really, I might argue the only thing that's holding Canada up right now is relatively firm energy prices. But I have some very bearish projections on energy right now, especially crude oil. So as a result, I wouldn't be shocked if this, and also too, I noticed, along with drill baby drill. So, the day Trump gets into office, man, North Dakota is going to go crazy. But they've actually announced that Canadian Pacific, I think it's Canadian Pacific, and Kansas City Southern, I can't remember, one of the big railroads based out of Kansas, they're actually merging. And so as a result, there's going to be a direct rail line from the Alberta oil sands right down to Cushing, Oklahoma. Whereas before it had to go through a whole bunch of connections. So that means that our Alberta oil sands oil, the bitumen, has a direct connection to Cushing, which of course is even more oil bearish going forward. And the irony of it all is that North America has so much oil. It's insane. Canada alone has the second largest oil reserves in the world. So the last thing in the world I think anybody really should be is bullish of oil. At some point, that supply is going to start hitting the market again when they get these stupid idiot woke socialists out of power and they start funding the market again with all this oil. We probably should see oil prices come off smartly. Anyway, finish off the thought with a quick note about crypto. Of course, ETH just did have its ETF launch. And interesting to see, ETH is making lower highs and lower lows. We do have the ETF. Actually, you know what I really like right now are my little gold stocks. Oh my goodness. This jugger. I mean, 160,000. So buyers are coming in here. And actually, Murad even suggested we should throw on our relative to the S&P 500 indicator. It helps a lot, making sure that you're on a half decent trade. So you can see how he's trying to outperform versus the S&P 500. But look at that price chart. I mean, nice double there. I went and picked up another whack of this thing, another 10,000 shares. That's sort of my junior proxy in the Canadian oil space. This is my intermediate proxy in the Canadian oil space. Excuse me, gold space. Did I say oil? Sorry, I meant gold. And this thing just looks absolutely perfect. Oh my goodness, bought, away you go. So I stepped in and of course bought the W here, added to the position at 1,000 shares. So, and look at that nice outperformance signal there. Oh boy, that thing looks great. Look at that chart. Oh, so sexy. I don't know whether it's a good idea to chase it all the way up here. If you want to join me, there is gaps, maybe throw in a stink bid. But I don't know whether it's a good idea to come in and chase that now. So the mining stocks are looking good. And then if you want an area play, basically in the same neighborhood, but all it is an area play where they have like something like 700,000 acres of land up in what they call the Golden Triangle up there in sort of mid-northern BC. This is my area play. Basically just rolled the stock back. It's some sort of, I guess, what I would consider totally, venture. And sometimes these ideas just don't work. So just understand that. But the guy who started Goldcorp, he's long this thing to the tune of, I guess, 1.2 million there in financing he just took down. So I'm more than happy just to sit in here. So this guy's underwater, no doubt about it. But I'm not in a hurry here to do anything with this guy. And the GOT and the Jugger, they're moving up nicely here. I like that sector right now, and especially if I'm bearish of oil, then I like that sector even more. But that's not what I'm supposed to be talking about here. Finish off this free broadcast with a quick boo at Yield Crypto and corn proxies. I did notice that a lot of the miners were actually up this morning. I can't believe how that HUT 8 has just totally outperformed. I don't want to get distracted, but if I'm lucky, maybe my bids on Intel will get filled here now down in the high 20s. But where is our BTC? Where are our crypto names? We got a whole bunch of those names. Where are they? The ETFs are on here somewhere. And when I go quickly through that, I'll just skip right over them. So I got to go slowly. Hey, there we are. Oh, interesting. They're all back positive again. That's good to see. ETH. These guys are not really catching a bid here. I do think that this is a function of, buy the rumor, sell the news. I showed you the matrix image here. Is Bitcoin going to catch a bit of a bid? You can see it's got an M top working here on the intraday charts. And as I said earlier, it feels as though Ethereum has rolled over and we're now in a sell the news scenario there. Still have these funny little shorts working here. This is the free position. That was the buy the rumor, and you can see how an M top has actually come in and confirmed here. And we're right at that previous downtrend line that defined our playground. So it's interesting how you can see we rallied up to the top of the playground here, and we're just fighting like the dickens right at this line here. Look how it's resistance, then support, and oh boy, are we going to slip back down and back into the playground? And if we do, you can see fog and bombs. Oh boy, you could see some fireworks here, folks. Be careful. And the only way I can get bullish of this is if I start seeing three higher lows. So we do have one panic dump low. We have this current bars low, so that's got to hold. And down, up, one more. And if we can turn back up, then I can start thinking, okay, well, maybe this is trend continuation to the upside. We did have a bullish bot here try and set up here off of this W that formed here. Although that doesn't look quite right. Oh yeah, there it is. Okay, so had you taken this double bottom, and it's only a double bottom, it's not really a triple bottom, but had you taken it and you're long from what is that number 3486, 3485, 3487 in that area. If we break down through this 3367, you better run for the hills. Just don't try and be a hero here, because like I said, look left. If we start losing these lows here, oh boy, it's a long way down to previous institutional fingerprints all the way down here. So be careful here, folks. Please be careful. And as I had sort of said, we had actually Sword back from his vacation yesterday. Had a great conversation about fundamental ideas and names in the space. And on balance, I think Sword's still very bullish of all the names that he's previously bullish on. Really, nothing has changed. But what I would just simply say is, this is a dangerous market state where actually I'm seeing a lot of M's starting to form. We had pointed out in the after party yesterday about this Cardano. Oh, actually, this is Cripple. Cripple here, I'm not necessarily going to say that this is a sell. It doesn't look like it's M'd out or broken down, but you can't come and buy that here. You can see where the W is way down here. So if anything, you should be sitting on free positions now, and maybe you have your stop at scratch on the second half of the trade, or maybe the last third of the trade or whatever, and maybe you have your stop below this low now, but you can't buy that. And kind of like what I said with Bitcoin and Ethereum and stuff, if I do want to hunt longs, I got to see some consolidation here and give me those three higher lows to set up bot setups. So there's nothing for me to do on a name like that. And remember, I had showed you the weekly commodity trend survey earlier that actually a lot of names are starting to say, you can actually start hunting shorts because they've jumped up so much. So be careful here, folks, please. I mean, that's just, a message from Uncle Brian. Just try and be careful with your money. The only other thing I'm going to leave off, and I think this is probably a good analogy, kind of like the cripple, is if you did have the balls to step in off the bottom end of the range, just make darn sure you have your sell orders working. And here's a really fun little one. This is a DITH that I picked up some originally off of this original reload zone level, thinking that this was the bottom, but we were kind of talking about how probably the bottom comes in through the July 4th holiday weekend, whatever. Put in another sexy little 78.6. So I added to the trade. You can see where my double level is right now, but I'm working good old chaos theory, 2.618. I like the idea of a nice stab up against these highs. So I have my orders working up here. And I think that's what you have to do in this space. Obviously, you can't chase a name that looks like that right now. You've missed the trade. It's gone. Now it's just really a question of, okay, all right, when do I actually start ringing the register? I threw an order up top here, but if we start getting beyond that sell half on a double level, and I start seeing some weakness actually come in, M's, that kind of thing, I might just hit the bid and book that double. So that's the market state. That's the market sort of I mean, for lack of a better term, the market state right now is if you did get in off the bottoms, great, good job. Make damn sure to have your profit. You don't have to sell everything, but de-risk as fast as possible. Try and use concepts that we teach, things like fog and bombs and stuff to help you sea levels, but don't be in love with this stuff. And for God's sakes, please do not chase. You can't buy a name that's right there looking like that right now. So, okay. That was surprise, half an hour. Brian's pretty good at that half-hour number. One of these days I'll try and get down into that 20 minutes window, but I don't know. We'll see how we do. Hope you enjoyed that offering. Gave you a pretty good look at the broader market and what I'm seeing on the day. And I think I like the theme of rotation here. It's not necessarily that the stock market, or even crypto for that matter, is a short or it's a sell. I think it's just some parts of the market got a little too far, a little too fast, and they need to clean themselves up a bit. I mean, you can see this Project Galaxy, really good example. Look at that big jump, and now it's emming out and working its way back down. This guy here, I don't know what the hell this is, Jasmine. These are some of these names that Julian likes to follow, the social influencers. I don't really have any association with any of these, but just that I like to keep them on the screen just to see how they do. You can see, look, there's an M there, there's an M there, there's an M there, there's an M there. I mean, so, I think the writing's on the wall. So. Okay, everybody, have yourselves a great rest of your day. PMA for the win. Slow and steady wins the race. Let's head on over to the after party, and I don't know, we'll talk shop a little bit more. Don't take no wooden nickels. All the best, and bye for now.